Iron ore is predicted to drop 25%. Let's have a look. Hello everyone, Florian.Heise here with my stein of coffee in hand, and I thought we'd have a look at this article from the Financial Review discussing concerns or predictions that iron ore may drop 25% lower by the end of June. Now you might ask, why is this important to us? Now there's a few reasons. Let's have a look. We'll jump over to Google Earth and you can see here is our beautiful island nation, and I will turn on these places. Now this is operating mines in Australia from 2014, and actually I'll turn them all off and see them appearing on and on. How about we just turn on iron ore? You can see there as I toggle it all of the iron ore mines. We've got, one in Queensland, a couple in South Australia, even Tassie has some. But Western Australia is definitely home to a significant number of our iron ore mines. Australia is the biggest exporter of iron ore. Now this data that I'm showing you is from 2014. It is the latest I could get, but it does clearly demonstrate where all our mines are located and how many we have. Now, let's have a look here on trading economics. I'll just move the Google Earth away. I'm just watching the market today. It's a bit all over the place. And we will scroll down and we can see iron ore. We'll bring it up and it's at $83 US. So it's got a nice little green one next to it. It's been going up. We'll have a look here. We'll change to a monthly chart and we'll go to the all data they have. So at the beginning of, this time last year, or about July last year, iron ore was trading at $121.40. So it's lost about $40 since then. January this year it was at $88, so it's just gone down 5. So it's been jumping up and down. Look at the all-time highs back here. Remember 2011? $170, $188. It's when I was working in the mining industry, and the price of some of these resources was just driving up the infrastructure that they were investing. So this is important. Now there's a few things that we need to be aware of with this price. If it hits below $50, so below this level, it's going to have an impact on the government's budget. $50 is what they've based a lot of their budgeting on. Not that that really matters that much anymore, considering all the government stimulus spending, market interventions that are occurring now. I think the budget is completely out the window, not even being considered. Now, another thing we need to look at, and this is most important, is an overview of the Australian economy. Now, iron ore is one, if not our biggest export, if we don't count tourism or higher education as a physical good. Australia is a very primitive economy. If you're not aware, our economic rating or economic complexity rating is 0.09. We're 59th in the world. This is based on the OEC methodology. I will bring up the Harvard Atlas. This is another methodology for measuring the complexity of economies in different nations. And here Australia is 93rd in the world. So we're worse on their chart. So we'll look at this one. Now, we look at what we're importing much more complex things, but the destination of our exports biggest one is China and all of Asia too. So a hit to the Chinese economy is going to affect us, it's going to affect the rest of Asia, and it's going to have an impact on demand for our goods and services, particularly iron ore. Not even mentioning university education or tourism. They're both taking a hit. So a drop in iron ore of 25% by the end of June is important. It's something that every Australian should be concerned about, guys, because it's going to exacerbate all of the economic issues that our nation is facing at the moment. So let's have a look at this. The price of steel making material is poised to drop by 1/4 to $60 a ton by the end of June, according to Capital Economics. In an update on the industrial metal, Kieran Clancy said, as steel stocks continue to swell in China, we think that China will will follow the rest of the world and cut steel output, denting prices for iron ore and having an impact on the Australian economy, guys. Because I was mentioning the $50 iron ore price, that affects the government budget at a federal level and also at a state level. But if we jump here, and I will bring up Google Earth once again, how much of an impact do you think it's going to have on Western Australia, guys? Or the people working in the mining sector? Or the property sector in Western Australia? Mr. Clancy sees iron ore falling to $60 a tonne by the end of the second quarter. While he's penciled in a small recovery to US $70 a tonne by the end of 2020, that would still leave the price far below where it began the year. Iron ore was last priced at $83.64 US a tonne by Fastmaster's MB. It traded above US 97 a tonne in mid-January. Mr. Clancy says he's now forecasting a surplus in the iron ore market for over 40 million tonnes in 2020 from a deficit previously. So, I mean, there you go, guys. That's gonna definitely have an impact on our economy here in Australia. Because remember, we're the biggest. We are the biggest. I'll bring it up here. Iron ore. The top exporters of iron ore are Australia, then Brazil, and South Africa, Canada, and the Ukraine. Top importers are China, Japan, South Korea, Germany, and the Netherlands. Now, here's the thing. The iron ore price that spiked earlier in the year was because of a flooding issue and a dam busting in Brazil that affected the market, affected supply. So Brazil kicked back in with their iron ore supply. So, you know, this is an example of our relationship. Look at the complexity of it, because they rank all the products in the world. Iron ore is 1,000, or all the products in their database. Iron ore is 1,166 out of 1,232. It's not a very complex product. Not that I'm disparaging anyone that works in the industry. It is a bloody important one, guys. Capital Economics Rethink is in contract to Fitch Ratings, which earlier this week affirmed a US $75 a tonne price forecast for iron ore this year. It sees the price sliding to US $60 a tonne in 2021. The short-term iron ore and hard coking coal prices are supported by reduced supply from production disruption and still relatively high demand from the Chinese steel sector. Well, there's the other thing, guys. The coking coal, if the demand of that takes a hit as well, that's another part of our economy, exporting coal. In an April 3rd note, Liberum reiterated its expectations that iron ore would drop to into the US $50 range by the end of the first half of 2020. That's concerning. It may not last, but for the moment, iron ore producers are still making abnormal profits in an otherwise abysmal commodity environment, Liberum said. Realized pricing has benefited not only from robust benchmark price levels, but also lump and pellet premier and low freight rates. Well, there you have it, guys. Predictions of iron ore falling by 25% to June, or the end of June, and then even down to $50 a tonne by the first half of 2020. It's something that, well, as Australians, we need to consider, and which is certainly going to have an economic impact on our nation. And remember, guys, you also got to look at coal. Hang on, we'll go back to Australia. Coal is a big portion of our exports. It's 19%, almost equal to iron ore. So guys, once again, thank you all for watching. Please like, share, and subscribe to the channel. If you're a fan, please You can support us in many ways. We have Patreon or YouTube where you can join the channel for a monthly fee. You can use our affiliate links at Amazon or eBay for your consumer purchases. We have merch you can get from the HeiseSays website or from Teespring. You can use Gold Pass to send us your Perth Mint gold. We also have PayPal if you want to contribute that way. And finally, we have referral links for Independent Reserve and Kucoin for all the crypto traders out there. Thanks to everyone for watching. Take care, and I will see you all in the next video. Bye for now.